This is an on-the-radar briefing. Today's update looks at emerging signals in public discussion around personal auto insurance, where customers are reporting growing frustration not just with pricing, but with the overall claims experience. This briefing reflects aggregated public discourse across consumer forums, complaint channels, and professional communities. It represents frequency and consistency of concern, not editorial judgment. Several related themes are appearing together with increasing regularity. The first centers on unexplained premium increases and a lack of rate transparency. Many customers describe sudden double-digit price hikes, sometimes exceeding 20%, despite having no claims history or changes in driving behavior. The frustration expressed is not only about higher costs, but about the absence of clear justification. People frequently report that rate adjustments feel arbitrary, with limited explanation beyond broad references to market conditions or risk models. Over time, this creates a perception that pricing is unpredictable and difficult to trust, especially for long-term policyholders who expected stability and loyalty benefits. A second signal focuses on third-party claims adjuster responsiveness. In accidents where another driver is at fault, customers often rely on the other party's insurance carrier for resolution. Discussion repeatedly highlights delays in communication, unanswered calls, and long gaps between updates. Some report waiting weeks for rental approvals or basic next steps, leaving them without transportation while cases remain unresolved. This concern emphasizes not just inconvenience, but the cascading impact on work schedules, family responsibilities, and daily life when mobility is disrupted. A third recurring theme relates to the overall tone of the claims process. Customers frequently describe the experience as adversarial rather than supportive. Instead of feeling assisted during a stressful situation, many feel scrutinized, questioned, or treated with suspicion during legitimate claims. Language such as being treated like a criminal or having to prove innocence appears regularly in discussion. The issue here is not policy coverage itself, but how the interaction feels. For many, the emotional cost of the process becomes as significant as the financial one. Another major signal centers on total loss valuations and rental coverage. Customers report payouts that appear below current market replacement costs, often based on outdated comparisons or limited valuation methods. At the same time, rental car allowances are frequently described as insufficient to secure comparable vehicles, forcing out-of-pocket expenses during an already disruptive event. The combined effect leaves some policyholders financially underwater, even when they carry full coverage. This creates a perception gap between expectations of protection and the reality of reimbursement. Finally, discussion highlights repair shop payment disputes and coverage limitations. When vehicles are repairable, customers describe situations where insurers only cover costs at preferred shops or set maximum reimbursement rates. If a chosen repair facility charges more, the difference may fall on the customer. At the same time, concerns arise around repair quality at approved shops, creating a trade-off between cost coverage and confidence in workmanship. This dynamic places policyholders in the middle of pricing disagreements they are not equipped to resolve. What's notable is not any single complaint, but how consistently these themes appear together. Across pricing, communication, valuation, and repairs, the common thread is predictability and trust. Public discussion suggests that customers are less concerned with isolated mistakes and more focused on systemic friction throughout the entire life cycle of the policy. From a narrative monitoring perspective, this reflects a broader shift from dissatisfaction with individual claims toward skepticism about the insurance experience as a whole. Within the GlobalInsight application, signals like these contribute to broader risk framing and response-oriented analysis, while interpretation and decisions remain with the user and their operating context. If you'd like to explore the underlying signals behind this briefing, You can review the aggregated analysis directly at GlobalInsight.ai. Thank you for watching. If this briefing was useful, like, comment, and subscribe to see future topics as they move onto the radar.